The stock market giveth, and the stock market taketh away. This year alone, the NASDAQ is down about 13%. We are what we like to call a correction, which is just a fancy term for we lost a lot of money very quickly. And it's actually heading towards a bear territory, which is going to be when we drop 20%. Here's a quick stat for y'all to think about of what's going on in the NASDAQ right now. More than 70% of NASDAQ stocks have fallen at least 20% from a recent high, which means that they're technically in a bear market. More than half of the NASDAQ stocks are down 40% or more. 40% or more. That is just crazy. That's a full-blown crash that's happening. So the question is, what do we do when the stocks we own are getting absolutely hammered? What do we do when the stock market is getting absolutely destroyed? In this case, what do we do when a stock we own is down more than 80% in the last year alone? What are you going to do? For example, in my case, Lemonade is down 80% for me. It's crazy. It's crazy. So what do you do when a stock you own is down such a large amount? What do you do? Well, the first thing that I usually do is I go back to my research. I go back to looking at why I bought into this stock in the first place. I go back to looking at all the financials, if they still match up to what it is that I thought it was when I first invested in the business. In the case for Lemonade, I went back to look at some of the financials, and I mean, it just re-upped my conviction in the company. And I was like, oh yeah, that's right. Lemonade is still growing. Like, it's exactly what I expected. Like, these were all the things that we knew was going on with Lemonade, with them acquiring more and more customers, growing their in-force premiums. It's like, okay, cool. Like, that makes sense. Plus, I remembered, oh wait, Lemonade made an acquisition for Metromile to go into car insurance. So Lemonade is in a good place. Lemonade is continually growing, right? And so I'm like, all right, cool. And then plus the other day I was talking to a friend of mine who just started her full-time position, just started working full-time. And I was asking her, she's moving to a new state and everything. She's getting all the stuff set up. I was helping her with her finances. She mentioned she had to get renter's insurance. And I was like, oh, what renter's insurance are you going with? And she said Lemonade. And I was like, oh, that's cool. And then she also was getting a car. And she was like, yeah, I'm also going to use Lemonade for my car insurance as well. And so you put two and two together. At that point, you're just kind of like, okay, like this company is moving in a good direction. I know that's just one instance of one person, but for her to even know about the company, she was introduced to Lemonade by the people who were serving up the renter's insurance. I remember when I first got my apartment, the first thing that I had to figure out was, where am I going to get renter's insurance from? And it wasn't like I was searching hard. I just went to the desk and they had it on the desk and it was like, oh, State Farm. Yeah, sure. I'll just use them. I'm like, okay, Lemonade is growing. There's nothing for me to worry about when it comes to that. So what about if we look at another company in my portfolio, like Amazon, for example? Amazon is down 16% this year alone. It's down 16%. And in the last year, Amazon hasn't moved at all. If we look at over the last year, Amazon hasn't done much of anything. It's just been trading sideways. And now it's down 13+%. So what do you do in that case? Well, the thing I do is, again, I go back to the research and I look at, okay, what is it that investors didn't like about Amazon last year? And then you read and I remembered like, oh, wait, that's right. Amazon decided to forego a lot of its profits last year. As it says in this, article by The Guardian, it says Amazon's profits declined by the largest percent in more than 4 years, as the online giant said it has spent heavily on coping with this pandemic and delivered a downbeat forecast for the holiday season. Net income decreased to $32 billion in the third quarter compared to $6.3 billion in the third quarter of 2020, its largest year-over-year decline since 2017. The company's revenue, $110 billion for the quarter, were also below analyst expectations. And this is Andy Jassy, who's now talking and telling like, this is why we're doing all these moves. It wasn't that they didn't make the net income. It's that they decided to suppress their net income in order to invest back in the business. And then they said, we're always said that when confronted with a choice between optimizing for short-term profits versus what's best for the customer over the long term, we will choose the latter. And you can see that during every phase of this pandemic, said Jassy. The COVID pandemic drove extraordinary investments across our business to satisfy customer needs. In the fourth quarter, we expect to incur several billion dollars of additional cost in our customer business as we manage through labor supply shortages, increased wage costs, global supply chain issues, and increased freight and shipping costs, all while doing whatever it takes to minimize the impacts on customers and selling partners this holiday season. It will be expensive for us in the short term, but it's the right prioritization for our customers and partners. And so when I hear that, I'm like, I understand it. It's like, I understand it. Plus, we have to also remember that Amazon is one of the largest players when it comes to AWS, which is actually what drives a lot of their profits. I actually think that Amazon is now a AWS cloud computing company and has a side hustle of e-commerce. Even though e-commerce is continuing to grow. I use this stat a lot, which is that in the United States, only 13% of total retail is done online. And plus, they just made an announcement that they're going to the physical retail as well with Amazon style. So Amazon, when I look at them, I'm like, you know what? That's a very, very inviting thing to see Amazon trading sideways, and to actually right now, Amazon actually trading downwards. It makes me think like, yo, maybe I need to buy into Amazon. Even though I'm down 16% on my position in Amazon. I put 2 and 2 together. I go back to my research to understand, why did I buy this company in the first place? And that's the first thing you need to do is, why did you buy that company? Did you actually do research in that company to build up some level of conviction in that position so that when these times come, because they always come, that's the thing, like the stock market is, it will take its money back. The stock market will do its best to ruin your investing life. And so you go back to that and say, is the stock market being reasonable, or is the stock market not being reasonable right now? And can I use this to my advantage? And so in this situation, this leads us to the second thing you can do is, after you do that research again and you go back and build your conviction up, the question is, do I need to buy more, or do I need to leave this position alone? In my situation, I would love, like if we go back to my holdings, I would love to be able to start buying back a lot more into Lemonade, to be able to buy back into Amazon, which is something that's going to be a focus for me this year. Because I'm looking at their business. If you look at Lemonade, I am still down 60%. In other words, maybe I was overpaying for the company a little bit. So now the company is worth about $1.8 billion, which is, I would say, is right about fair value for it. So now the question is, do I buy more, or do I sell out of this company? And for me, the answer is very simple. I'm buying more. If I have money, which I don't, unfortunately, because I'm doing some other stuff on the side, more to come soon, I'm going to be buying more. I'm down 57% on this position. Okay, like it is what it is. I lost a substantial amount of money. Okay, it is what it is. Because the one thing we have to remember is, the lower a stock goes, the less risky it is. We have an inverse mindset where we believe that the more expensive the stock, the more all-time highs that the stock market is hitting, the less the risk. But that's not true. That's not true. It's the opposite, actually. The lower it is, the less the risk you are taking in a position, in a company. And so for me, I'm super happy right now. And I tweeted out the other day, I said, please let this stock market continue to fall for an extended period of time. And I'm hoping that we don't see a 2020 coronavirus type of rebound immediately once the stock market falls. I need a substantial amount of time, because I don't make money off of YouTube. I don't make money off of a lot of different sources. So I don't have a lot of disposable income for me to be just throwing into the stock market any which way. So it takes time for me to be able to build up a position that I like, which is why you look at my portfolio. In this portfolio, it's only like $2,000, because I don't have that much money to be throwing around. If I did, I would definitely be investing more. But the point is, you have to build up that conviction and determine for yourself, what am I going to do? Am I going to sell? Am I going to do nothing? Am I going to buy more? And then the last thing that you can do when the stock market is crashing and everything just seems like it's just going to fall over around you is walk away. Stop paying attention to the news. Stop paying attention to all of the Instagram and the TikTok and the Twitter and everybody you doing lost porn and just shoving it in your face, talking about, oh, the stock market is crashing. The stock market is crashing, and everybody's giving you different pieces of advice. Just walk away. Go do something else. Stop paying attention to the markets. Go pay attention to the NFL playoffs right now that's going on. Go pay attention to the NBA that's about to have its playoffs. Go pay attention to the African Cup of Nations, which is happening, which Nigeria, we better win this thing. I'm just saying, we better win this nonsense. Just saying, but we better win. Anyway, but go do something else. Go pick up a new skill. Go learn how to do something. Don't just sit in front of your screen looking at it, glued to the losses that are happening right now. Remove yourself from the situation so you don't make a mistake that you end up regretting, especially when it comes to our retirement funds, especially when it comes to our 401ks. Those you really should not be touching right now. Please, if you have a 401k, if you have an IRA, if you have an HSA where you're invested into, please do not touch those things. Don't touch them. Don't look at it. Don't even breathe on it. Let those things continue to invest automatically on your behalf. Please, please. This is for your future. Please. But when it comes to this, maybe uninstall these brokerage apps Turn off the alerts, please. I talked about this once in the past. Turn off brokerage accounts alerts. The only alerts you should be getting from your brokerage account is when you transfer money into the account, and that's it. That's it. Do not get alerts of like, oh, you're down 30% in this position. You're down 40% in this position. You're down, like, turn those things off. Those just make you want to make bad habits, which is why I love M1 Finance. I talked about this on Twitter as well. Like, the best way for you to become a better investor is to use apps and applications that actually help you become better, that actually help you make better decisions, which is why I love M1 Finance. It's boring. The brokerage is boring, but boring can be good. Boring doesn't have to be trash like Vanguard. Boring can be good to help you make the right decisions. So please do these 3 things. 1, research. Go back to your research. Figure out what it is. Why did I buy this company? 2, decide what it is you're going to do moving forward. Are you going to buy more, or are you going to sell out of it? Or are you going to do nothing, which is an option that most of us forget about? And then 3, walk away. Get out of your house. Do something else. Do not just stay glued to this stupid computer or to your brokerage accounts. Turn off all those stupid alerts. So please, do not let this stock market crash, which it is going to turn into a crash. Right now, the NASDAQ is in 13%. I expect it to go into a full-on blown crash. This year is going to be extremely bumpy. That's what my expectations are for this year. But take your time with it, okay? Do not allow this to blow your entire financial future into the waters. But anyway, that's all I got for y'all. I hope y'all learned 1, maybe 2 things out of this entire thing. And if you did, hit that like button and then share this video with anybody you think needs it. Please share this video out with 1 person that you love, 1 person that you hate, and 1 person you're just kind of like, about. And by that time, you to share it with every single person that you know. But it's been your boy Kalechi. I'm gonna catch y'all up in the next one. Remember, generosity is always greater than greed. God bless each and every single one of y'all, and I'm out. Peace. Whoosh.